Lately, everyone wants to know what's wrong with the stock market. It seems that just overnight, the trend has turned from sunny to sour. Here, we'll show you what changed and what to expect. This is the Fed Funds Futures, showing the probability the Fed will not cut rates in December. November 13th, the odds the Fed will not cut interest rates jumped from 30 to now nearly 60%. What happened on November 13th? The longest government shutdown came to a close, and all of a sudden, the mood in the marketplace turned south. Perhaps with the odds of a Fed cut disappearing from sight, the stock market is coping with the disappointment of interest rates that no longer appear to be declining. From the large cap Dow to the technology based NASDAQ and everything in between began to tick lower, including cryptocurrencies as well. As always, the real story is found in the bond market. The 13-week Treasury bills have not wavered. This is important to note as short term yields move closest with the expectation of interest rates. And just as the Fed funds futures told us, the market is not expecting the Fed to move. Meanwhile, the longer term 30-year bonds continue to tick higher, almost as if the Treasury market anticipates an economic recovery. Here in blue, the 30-year bonds, and in yellow, 13-week bills. The spread between the two continues to widen. This is a picture of an optimistic economy that does not need lower interest rates. Take the 30-year yield and subtract from that the 13-week yield. The spread between the two shows a difference between immediate Fed policy and long-term economic prospects. This spread is flirting with just 1%. This is a pretty significant level. In fact, the 30-year, 13-week spread hasn't breached 1% in quite some time. In fact, we haven't seen an average monthly spread going back several years above 1%. What do you think? Are the prospects of an economic recovery that rosy? While stocks continue to sell off, the VIX volatility index that continues to edge higher. While a 22 VIX is still relatively low, the surge higher is not what we want to see. But there is reason for optimism, and there's historical precedent to back up this claim. Here's the average VIX for each day of the calendar year, based on numerous years of data. We're currently on the 321st day of 2025. Historically speaking, the VIX tends to peak around day 280, and then the trend lower for the remainder of the year. Let's take a closer look at the figures. Going back several years, October has historically produced the highest VIX, with November and December producing declines. This, of course, factors in bull markets and bear markets alike. So this begs the question, why is it that the conclusion of the government shutdown coincided with a spike in the probabilities of no Fed cut? While I don't think any economist may know for sure, it's widely believed that the shutdown, as it came to a close, well, this provided the markets with little more security than it had before. And while the release of nearly all economic data was temporarily halted, including non farm payroll, the ADP jobs data was reported on schedule. And the latest ADP is looking up. And maybe that means the missing non farm payroll will also show an improvement. Well, let's dig into the ADP report. 42,000 jobs were created, much better than last month's loss of 29,000. And that's pretty good. But under closer examination, well, there are issues. Leisure and hospitality, losing 5,000 jobs. ADP information, that was not good. Losing 17,000 jobs, the worst report in several years. The construction sector gained some ground, but only to the tune of 5,000 jobs. And the long term trend to the downside is quite clear. Manufacturing can't seem to find a bid, losing 3,000 jobs this month, the sector showing little signs of life. There is a bright spot to this report, but the good news is very contained. Trade, transportation, utilities gained 47,000 jobs. This by far represents nearly all the job growth in the past month, and a true economic recovery requires a stronger foundation. Tell us what you think as we wait with bated breath. What do you think the much anticipated jobs number will reveal? Also, join us at Substack, link in the description. We hope this has been helpful. We look forward to seeing you back soon.